Custom products are all the rage nowadays. They're cool, original, classy. What makes custom production even cooler is that it has its own accounting system. Today, we'll be discussing job order costing, the cost accounting system that takes place when customers order customized products and determine the cost of producing each job. When a company creates customized products for a specific customer, each customized product is produced separately and the whole production process is called job order production. Job order production requires three things: overhead costs, materials, and labor. These three costs added together make up the job order costing and are used to determine the cost of producing each job. Direct labor is the effort employees dedicate to finishing the job. Let's take a factory that makes really cool custom BMX bikes as an example. Direct labor is the cost of hiring someone to assemble the bike. The direct materials are supplies used to complete a job. In our really cool bike example, the materials would be the wheels, and the overhead is all the indirect costs acquired during manufacturing. In this case, the overhead would be the things such as rent of the factory or the electric bill. The costs of manufacturing are kept track of in work-in-progress inventory, which refers to goods that are only partially complete and then are transferred to finished goods inventory. Its total costs are then transferred to the cost of goods sold when it is delivered to the customer. These inventories, however, do not provide enough detail for managers to know the cost of each job. So a job cost sheet is created to maintain a cost record for each individual job. The job cost sheet is a one-stop shop for information about the job. It has everything: the customer, key dates, the job number, and the costs including estimated overhead costs, direct material costs, and labor costs. It's basically the encyclopedia of the job, and managers use it to monitor costs sustained and predict future costs. On the job cost sheet, you'll see that the total cost of production is the cost of materials plus the cost of labor plus the overhead. So, if the materials are $100 and the labor is $200 and the overhead is $300, we would add them all together and the total cost of production would be $600. It's important to note that on the job cost sheet, the overhead is only estimated. Managers need overhead in order to monitor job profitability, so they estimate the overhead and then close the overhead at the end of the job. Job order productions are essentially made-to-order services. Every order is unique, so an important part of job order production is that they are orders with low production volumes. Other key features include diverse products and services, high product flexibility, and low standardization. Large quantity orders have their own system called process operations, but that's a discussion for another time. That's it for our overview of job order costing. Next time you make a custom order, think about all the work that goes into producing that order. The orders might be unique, but the accounting system they use is standard practice.